Hello everybody, it's Zach here from RealEstateLicenseWizard.com. Are you looking to ace your real estate exam and become a licensed real estate agent? Look no further. Our practice exam is designed to give you the best chance of success by simulating the actual exam experience. This practice exam covers all the key concepts you'll see on test day in 2023, so you can feel confident and prepared. The way this works is I go through every question, read it over, give you guys an opportunity to think about the question and come up with your answer. It's that simple. Now after this video, you should test what you've learned and head over to RealEstateLicenseWizard.com. Not only do we offer a completely free version of the exam, like the one I'm covering today, but we also have completely free state-specific practice exams to ensure you feel confident and prepared on exam day. And if you really want to help out this channel, you can check out one of our premium prep packages. Anyways, without further ado, let's get started. Question number 1. Mrs. Jane lives in a small residential neighborhood. 100-year-old trees surround her home, and her neighbor, Mr. Joe, claims the trees are on his property and is planning on cutting them down. Mrs. Jane tries to reason with Mr. Joe, but he refuses to listen. Mrs. Jane files a lawsuit that includes a court order for Mr. Joe to stop his actions until they can work something out. What type of court order is this? And it gives us 4 options. A, a temporary protective order. B, an authorized dispute order. C, an injunction. Or D, an easement. So like always, I'm going to give you guys a brief opportunity to think it over and come up with your answer. So go ahead and do that right now. Alrighty, so hopefully you came up with your answer. If you need more time, feel free to pause, no biggie there. So what is the correct answer for this one? Well, it's going to be C. That's right, C. It's an injunction. So if a dispute is pending, the court will likely issue an injunction preventing Mr. Joe from cutting down the trees until they are entirely resolved. Injunctions can be used to protect interests in real property. A court-ordered injunction can be used to prevent a harmful action, stop ongoing or repeated conduct, or force a defendant to take action to prevent harm. So this is one of those real estate law related questions that you just really need to be aware of. The terminology affecting basically court-ordered lawsuits and things like that. Real property law. All right, next one, number 2. The amount borrowed is called and it gives us 4 options. A, interest amount. B, principal amount. C, escrow amount. Or D, original amount. So take a brief moment to think this one over and come up with your answer. All right, so what is the correct answer for this one? Well, it's going to be B. It's the principal amount. The amount owed is called the principal, and the price of borrowing the money is called the interest. So it's pretty self-explanatory there. You just need to be familiar with, the difference between principal and interest in regards to specific, loan and interest terminology. So pretty easy there. Next one, question number 3. What is Ginnie Mae's primary responsibility? And it gives us 4 options. A, to create FHA and VA loans. B, to guarantee the security of loans. C, to maintain an active secondary market for mortgages. Or D, to manage and liquidate previously acquired mortgages. So again, what is Ginnie Mae's primary responsibility? Take some time and think that one over and come with your answer. So what is our correct answer for this one? So with Ginnie Mae, the correct answer is B. It's to guarantee the security of loans. So Ginnie Mae exists to solely guarantee the security of the loan. Ginnie Mae is a government agency that guarantees securities backed by loans issued under government agency programs such as VA and an FHA. Now Fannie Mae is a private corporation that buys loans from private lenders assembles them into mortgage-backed securities to maintain an active secondary market. So this is one of those ones that people get mixed up all the time. You need to be familiar with the difference between Fannie Mae and Ginnie Mae, and hopefully that kind of explained it well. But obviously, if you're still struggling with that, stay tuned, because I'm sure another question will come up, and we do have videos specifically on that too. All right, next one. Question number 4. What is the difference between the market value of your home and the amount you owe the lender who holds the mortgage? And there's A, appreciation, B, variance, C, proration, or D, equity. So take some time, think that one over, and come up with the answer. Alrighty, this one's pretty easy, or it should be. The correct answer for this one is D, equity. So, terms used pretty often in real estate. Equity is the difference between the market value of your home and the amount you owe the lender who holds the mortgage. Your equity is the money you'd receive after paying off the mortgage if you were to sell your home. Pretty self-explanatory there. All right, next one. Question number 5. Local zoning ordinances often regulate all of the following except A, density of population, B, market value of the property, C, height of buildings in an area, or D, appropriate uses for the buildings. So go ahead and take some time, think that one over, and come up with your answer. So what is the correct answer for question number 5? Local zoning ordinances often regulate all the following except... Correct answer for this one is B, market value of the property. Zoning usually increases the marketability of the property. That's where people get this a little bit confused, but it doesn't directly regulate the market value. The idea is that when a community is organized, it's more attractive, safer, has fewer conflicts among people. However, it does not directly affect market value. For example, they can't implement zoning code to raise what people would pay for properties. They can, however, implement zoning codes to help promote the local economy. Market value is never directly determined by the government. And that's super important to note, especially when we're talking about zoning laws, things like that. So remember that. All right, next one. Question number 6. Who or what determines the amount of an earnest money deposit? A, the agreement between the parties. B, the state real estate licensing statutes. C, the broker's or agent's preference on the matter. Or D, the minimum percentage via the sales tax comparison formula, in parentheses, purchase price divided by tax rate. So take a moment to think that one over and come up with your answer. Alrighty, what is the correct answer for number 6? Well, it is A, the agreement between the parties. Now, it is customary but not always required for a buyer to provide a deposit when making an offer to purchase. This deposit is referred to as earnest money. The amount is completely up to the agreement between the parties. There is no law stating an earnest deposit has to be a certain amount. And that's super important to understand. There's no state, there's no local law, there's no federal law. These other options are not, reasonable, and they're not true. The agreement is always between the parties. And C could, I see some people say this, the broker's or agent's preference on the matter. And regarding that, theoretically, yes, there is some preference there, but ultimately it comes down to the agreement between the parties. An agent could, say, hey, we want it to be a certain amount because we think, they'll more likely offer that or accept the offer if it's that much. and the potential buyer could be like, oh yeah, that's great, but ultimately, again, it's ultimately up to the agreement between the parties, the buyer, the seller. They need to agree on that. So preference is important, but who actually determines it comes down to the parties themselves. All right, next one. Question number 7. Which situation is legal under the Federal Fair Housing Act of 1968? A. The insistence of a widowed woman on renting her spare bedroom only to another woman. B. The intentional neglect of withholding certain properties to your clients to buy for yourself. C. The refusal of a property manager to rent an apartment to a Catholic couple who are otherwise qualified. Or D. The ability to buy a property with the intent to resell it to your mother-in-law for double the price. So take a moment there and come up with your answer on this one. Alrighty, so what is the correct answer for question number 7? Well, it is A. The insistence of a widowed woman on renting her spare bedroom only to another woman. So, this is a lengthy description, and I always put this question, we always put this question on every year because it's a confusing one, and people tend to get confused and struggle with this. So, what is the Federal Fair Housing Act? Well, that is the law that prohibits discrimination in the buying, selling, renting, financing of housing. These laws prohibit discrimination based on race, religion, color, sex, disability, children, nationality, and more. You cannot have a listing that states looking for whites only or Catholics only, something like that. The interesting thing is, however, you can put language referring to sex. For example, seeking female roommate. And however, it's only in the case of finding someone where you're going to be sharing living spaces with. So, for example, you can't have an apartment complex and be like, I'm only looking for, men in this entire complex or something like that. No, the living spaces have to be shared in order for that to work. Now, another thing is there's this thing called the Mrs. Murphy exemption, which provides that if a dwelling has 4 or fewer rental units, the owner, and the owner lives in one of those units, that home is exempt from the FHA. Now, Mrs. Murphy is this hypothetical elderly woman who converted a portion of her home into a rental apartment to supply or supplement her limited income. So there's a whole story about that, and we have a fascinating article that covers that on our website as well if you're more interested in that. But what you guys need to know come the exam is that there are exceptions, and they're few and far between, but they do show up. So you just need to be aware of these exemptions, federal fair housing exemptions. And again, the Mrs. Murphy one is one, and that would apply here as well as just, the regular, language referring to sex for, seeking female roommate or, male roommate, things like that. So keep that in mind next time around for these types of questions. All right, question number 8. In the case of a standard tax lien, who gets paid first? Is it A, the homeowner, B, the buyer or seller, C, the commission, or D, the government? So take some time and think that one over and come up with your answer. Alrighty, so what is the correct answer for question number 8, standard tax lien? Who gets paid first? Well, it's going to be D. It's the government. Tax liens are imposed by the federal, state, or local government based upon back property taxes that are due. Not only can these seriously impact your credit report, but until they're paid off, they can prevent you from selling the property. Tax liens are involuntary and usually specific. The important thing to remember is the government always gets paid first in terms of money distribution. So remember that. Alrighty, next question. Question number 9. Which of the following laws prohibits discrimination in the buying, selling, renting, or financing of housing. These laws prohibit discrimination based on race, religion, color, sex, disability, children, nationality, and more. Is it A, the Fair Housing Act, B, the Equal Credit Opportunity Act, C, the Civil Rights Act of 1866 and 1964, or D, the Smart Opportunity and Housing Act? So take a moment, think that one over, and come with your answer. Alrighty, so you should know this one because we kind of already went over it earlier, just a little bit. The correct answer for this one is A. It's the Fair Housing Act. So again, that's that main law that prohibits discrimination in the buying, selling, renting, or financing of housing. These laws prohibit discrimination based on race, religion, color, sex, disability, children, nationality, and more. Now, the and more comes into play with your state-specific fair housing law, and that's something that you will need to look into and be familiar with for your state portion of the exam. But as for the national, you don't have to worry about that right now. But just remember those protected classes when it comes to the Federal Fair Housing Law or Federal Fair Housing Act. All right, next one, question number 10. The real estate contract clause that almost always begins with the words to have and to hold. Is it A, the alienation clause, B, the habendum clause, C, the acceleration clause, or D, the prepayment penalty clause? So take a moment, think that one over, and go with your answer. Alrighty, do you know your contract clauses? Let's find out. So what's the correct answer for question number 10? The real estate contract clause that almost always begins with the words to have and to hold. Well, that is the habendum clause, option number B. The habendum clause is the statement in a contract that describes the rights and interests being given. It almost always begins with the words to have and to hold. Alrighty, awesome. Next one. Question number 11. Which act amended the Comprehensive Environmental Response Compensation and Liability Act, also known as CERCLA? So there's A, the SARA, B, the SDWA, C, the CWA, or D, the EPA. So take some time, think about these abbreviations, and try and come up with your answer on this one. Alrighty, so what is the act that amended the Comprehensive Environmental Response Compensation and Liability Act? Well, it is A. It is the Superfund Amendments and Reauthorization Act of 1986, also known as SARA. So this was passed when the original act, CERCLA, expired in 1985. It amended the act. The big change had to do with liability. When a property owner has been innocent of all involvement with a hazardous waste site, under certain circumstances, they may claim immunity from responsibility. In plain terms, it allows truly innocent landowners to have immunity from legal liability. And basically, the SARA also included the EPA to revise the hazard ranking system to ensure that it accurately assessed the relatively degree of risk to human health and environment posed. So the important thing that you need to know is that essentially it amended that first act, CERCLA, or one of the earlier acts, CERCLA. So when it expired, the Superfund Amendments and Reauthorization Act was established. And again, the important thing to remember is it has to do with liability. It added that layer of liability. All right, question number 12. What party usually pays the loan origination fee on a Federal Housing Administration or FHA loan? So is it A, the bank, B, the broker, C, the borrower, or D, the real estate agent? So take some time, think this one over, and come up with your answer. Alrighty, so the correct answer for this one is C, the borrower. So typically, the party who usually pays the loan origination fee on an FHA loan is the borrower. Now, this fee covers the borrower's right to obtain FHA-backed financing. So it is traditionally paid by the borrower. Now, FHA loans are a mortgage issued by an FHA-approved lender and issued by the FHA, which is the Federal the Federal Housing Administration. FHA loans are obviously pretty attractive to people because they require lower minimum down payments and credit scores that many conventional loans might not have. All right, next one. Question 13. Real property can be converted to personal property by, and there's A, inference, B, severance, C, accession, or D, changement. So take a moment to think that one over and come up with your answer. Alrighty, what is the correct answer for this one? Well, it's going to be B, severance. Severance is the opposite of attachment. Severance is taking an item that is attached to the land and removing it as personal property. So again, converting that real property to personal property would be considered severance. Alrighty. Next one. Question number 14. In order for a month-to-month tenancy to be legally valid, which of the following must the contract include? Is it A, oral or written consent, B, offer and acceptance, C, consideration, or D, all of the following? So take some time, think this one over, come up with your answer. Alrighty, month-to-month tenancy. What do we know about that? Well, honestly, this one's pretty. You need to be understanding of month-to-month tendencies to understand this, basically. So, what is our correct answer for this one? Well, it's going to be D, all of the following. So, consideration, offer and acceptance, written or oral consent, those are all extremely important, and they must be included in the contract in order for it to be valid. Now, I'm sure you're wondering, a little people get, a lot of times, sometimes people get confused with this oral written consent part. And let me explain that. So basically, oral or written consent can be made on a month-to-month tenancy, and it can be valid. Now, obviously, when we get a little bit longer, like let's say a year-long tenancy, because the statute of frauds is in place, that needs to be in writing. So sometimes people will see this first option and they say, "Oh, it says oral. I know that. I know, with certain tendencies it has to be written, so maybe it's not that one," and then they just choose like B or C. But you need to fully understand the context, and you need to be aware of month-to-month tendencies. And again, it can be oral or written consent. Alrighty, next one. Question 15. An elderly man in a nursing home has no family and is suffering from Alzheimer's. Because of his Alzheimer's, he doesn't remember much. Eventually, passes away in his sleep. There is no will for the man, and again, he has no family. So what happens to the money left in his savings account in his old farm that has been left untouched since entered the nursing home? Is it A, escheat, B, eminent domain, C, adverse possession, or D, inverse condemnation? So take a moment to think this one over and come up with your answer. Alrighty, so when you hear no will, think of escheat, which is our answer A, escheat. Instead of being handed down to his family, since he theoretically has none, his assets are going to go to the government in the process called escheat. Escheat is the government's right to take ownership of unclaimed real estate or assets. So remember that, because that's one of those important government powers that you need to be aware of for the exam. All right, question number 16. Compliance with zoning ordinances is monitored through the issuance of what? And it gives us 4 options. A, buffer zones, B, CCRs, C, covenants, or D, zoning permits. So take a moment, think that one over, and come up with your answer on this one. Alrighty, so what do you know about zoning? Well, you should know about zoning permits because those things pretty much go hand in hand, and that's our correct answer. D, zoning permits. So with CCRs and covenants, those are private. When we're talking about public land use controls, we're talking about zoning. Now, obviously, buffer zones is something to do with zoning, but that's a little bit different. Zoning permits are essentially what directly creates the compliance and making sure that it works and it's how it's monitored and essentially taken care of. So that is our correct answer there. All right, next one, question number 17. Which of the following got ahead of myself. Which of the following statements about water rights is true? Choose the best answer. A, water rights are pertinent. B, water rights are transferred exclusively in quitclaim deeds. C, water rights are double taxed, similarly to how corporations are taxed. Or D, the 2 basic forms of water rights are ocean rights and lake rights. So take a moment to think this one over and come up with your answer. Alrighty, what is the correct answer? When we're talking about water rights, we need to remember A, water rights are appurtenant. So, pertinent means they run with the land and not with the original owner. In other words, if an oceanfront property is sold, the new owner gains the littoral rights and the seller relinquishes his or her rights. So, again, water rights are appurtenant. Alright, next one. Question number 18. Which of the following is required by the Americans with Disabilities Act, or the ADA? A, all employers must have non-discriminatory employment practices. B, reasonable accommodations must be provided to people with disabilities. C, all employees, real estate agents included, get paid for working on federal holidays. Or D, an existing premise must be remodeled if requested by a person with a disability, regardless of the cost. So, you need to be familiar with your American Disabilities Act for this one. So, take some time, think about this one, and come up with your answer. Alrighty, so what is the correct answer for this one? Well, it is B. Reasonable accommodations must be provided to people with disabilities. So, the American Disabilities Act prohibits discrimination against people with disabilities in several areas, including employment, transportation, public accommodations, communications, and access to state and local government programs and services. The Act specifically requires reasonable accommodations must be provided to people with disabilities. So, this 4th one, D, an existing premise must be remodeled, regardless of cost. That's not the case. C, all employees, again, that has nothing to do with the American Disabilities Act, so I don't have to worry about that. And then A, obviously, all employers must have non-discriminatory employment practices. Sure, I mean that is important, right? I mean, and we know that from fair housing, or just laws in general. But when we're talking about the American with Disabilities Act, we're not specifically talking about that. So that's one of those questions where you could argue that maybe there's multiple correct answers, but you have to choose the best one. And the best one here is that reasonable accommodations must be provided to people with disabilities. All right, next one. Question number 19. Antitrust laws prohibit competing brokers from all of the following except A. Boycotting other brokers in the marketplace, B. Dividing the market to restrict competition, C. Agreeing to set sales commissions and management rates, or D. Receiving compensation from both the buyer and the seller. So take a moment, think this one over, and come up with your answer. Alrighty, so this is a little bit of a trick question. I'm curious if you guys got this one. So the correct answer for this one is D, receiving compensation from both the buyer and the seller. So that is not an antitrust violation. That's something called dual agency. Now, dual agency is when one real estate agent represents both the buyer and the seller in a transaction, which might seem ideal. However, it can lead to some significant risks, which is why it's actually illegal in certain states. But in a lot of states, it's still perfectly legal. But again, even in those states that it is illegal, it's not classified as an antitrust violation, while all the other examples are. Alrighty, next one, question number 20. Which of the following can be achieved by dividing the price of a property by the rent that is produced? Is it A, the interest rate, B, the capitalization rate, C, the economic value, or D, the gross rent multiplier? So take some time, think that one over, and come up with your answer. Alrighty, so when you read this one, hopefully a keyword came out so you can kind of figure it out. This one is D, gross rent multiplier. So pretty self-explanatory here. The gross rent multiplier is found by dividing the price of the property by its rent. So if you're just aware of that formula, then you should have been able to put two and two together on this one. And obviously it says here rent, so that was a little bit of a hint as well. All right, next one, question 21. A bilateral contract is one in which, and it gives us four options. A restriction is placed in the contract by two parties to limit the performance of the other party. B, the promise of one party is given in exchange for the promise of the other party. C, only one of the parties is obligated to act. Or D, something is done by only one party. So take a moment, think that one over, and come up with your answer. Alrighty, so bilateral contract, what is that? Well, a bilateral contract is one in which B, the promise of one party is given in exchange for the promise of the other party. Plain terms, bilateral contract is agreement between two or more parties. Most business and personal contracts fall into this category. All right, next one. Question 22. Under the terms in a mortgage, the lender must be paid in full if the property is sold to another person. This is known as it gives us four options. A, the alienation clause, B, the dominant clause, C, the habendum clause, or D, the acceleration clause. So take some time and think that one over and come with your answer. Alrighty, so Under the terms in a mortgage, the lender must be paid in full if the property is sold to another person. Which contract clause is that? Well, the correct answer is A, the alienation clause. The alienation clause is a contract provision that comes into effect when ownership of a specified asset is transferred or sold. It ensures that if a transfer of property happens, the lender is paid in full from the original borrower. It's a legal clause lenders add for protection. So I know a couple of you guys probably put the acceleration clause, and it is a little bit different. Remember, the acceleration clause comes into play when the contract is broken or there's a violation with the contract. That is when that happens. Alienation is when the property is transferred or sold. So just keep that in mind. All right, next one, question number 23. What is the illegal action or practice of lending money at unreasonably high rates of interest? A, forgery, B, usury, C, altercation, or D, puffing. So take a moment to think that one over and come up with your answer. Alrighty, so what is our correct answer? Well, it is B, usury. So usury is the practice of making unethical or immoral monetary loans that unfairly enrich the lender. Currently, most states have usury laws in place and set a cap on maximum amounts of interest a lender can charge. Now, these rates do vary significantly by state and may differ depending on the type of financial product you're using. But again, this is a form of predatory lending. So it's one of those things that you just need to be aware of, one of those important terms. All right, next one. 24. State laws differ on whether a buyer is entitled to know about, because it's 4 options. A, the sellers are getting a divorce. B, known lead paint is on the property. C, the flooding of the basement every spring. Or D, a suicide that occurred in the house last year. So take a moment, think that one over, and come up with your answer. All right, this one's always an interesting one. So the correct answer for this one is D, a suicide that occurred in the house last year. So the buyer doesn't need to know the sellers are getting a divorce. Lead paint and flooding, they obviously do need to be disclosed, and that's a nationwide thing. But state laws differ on whether a buyer is entitled to know about deaths. In Texas, deaths from natural causes, suicides, or accidents unrelated to the property do not have to be disclosed. However, deaths related to the condition of the property or like a violent crime on the property must be disclosed. Other states impose a duty on a stigmatized property in which there has been a suicide or murder. So again, state laws differ when it comes to deaths on property. All these other options, not the case. Obviously, A really doesn't matter because that's not the case either way. B, federal. C, federal. So just remember that. All right, next one. Question 25. Fees that the buyer pays to close the deal are called what? A, seller cost. B, closing cost. C, broker cost. Or D, earning deposits. So take a moment, think that one over, go with your answer. Alrighty, so what is the correct answer for this one? Well, it is B. It's closing costs. Don't overthink this one. Closing is the final step in executing a real estate transaction. It is when the official ownership and payment is transferred to the rightful parties, and the fees that the buyer pays to close the deal are called closing costs. Pretty straightforward there. Alright, question 26. As a general rule of thumb, all written offers must be A, sent to local government authority, B, presented to the broker's office, C, presented to the seller, or D, presented to the buyer? So take a moment to think this one over and come with your answer. Alrighty, so general rule of thumb with written offers. What is it? Well, it's C, presented to the seller. General rule of thumb. It is a serious breach of a real estate agent's fiduciary duty to the seller not to present all purchase offers. Doesn't matter if that offer is, maybe super low and you're thinking, oh, they won't accept this. This house, this property, it should be sold for more. It does not matter. They need to be presented to the seller. You need to understand that. All right, next one. 27. A buyer was negotiating the purchase of a lot to build a new family house. The seller indicated that the land was firm enough to support the construction of a building when in fact the seller knew it was not. The contract it gives us 4 options. A, voidable by the seller because of the mistake. B, voidable by the buyer because of fraud. C, valid. Or D, void. So take a moment, really think about this one, and come up with your answer. Alrighty. Hopefully you're familiar with void, voidable, and valid. What is the correct answer for this one? Well, it is B, voidable by the buyer because of fraud. In this case, the contract would be voidable by the buyer because of fraud. Voidable contracts have the necessary elements to be enforceable, so they appear to be valid, but can be rejected by one party if the contract is discovered to have any number of defects. Fraud is the act of intentionally deceiving another party or for financial or personal gain. So in this case, it's important to note, again, the seller indicated something that wasn't true, okay? And again, that would make the contract voidable because of fraud. All right, next one, question 28. A parcel of land that is subject to an easement is best described as, and it gives us 4 options. A, serving estate. B, a dominant estate. C, an estate in sufferance. Or D, an estate in tenement. So take a moment, think that one over, and come up with your answer. Alrighty, so a parcel of land that is subject to an easement is best described as a servient estate. It serves. By definition, a servient estate is a parcel of land that is subject to an easement. So that's an important way to remember that is if it's serving or subject to, it's the servient estate. Alrighty, next one, question 29. A buyer and seller entered into a contract that negotiated the sale of the side lot at the same time as the transfer of the home. What is the second document called? And it gives us 4 options. A, an option. B, a contingency. C, an addendum. Or D, an amendment. So what would that second document be called in this specific case? Think about that and come up with your answer. Alrighty. So, what is the correct answer for this one? Well, it is C, an addendum. So, an addendum is an attachment to a contract that modifies the terms and conditions of the original contract. An example of an addendum being used would be if the parties wanted to add something to the original document. For instance, an individual who's purchasing a house may not want to purchase all the furniture that is being left behind. However, after thinking about it further, they may change their mind and they need an addendum. So keep that in mind. Again, the addendum, amendment, contingency options, all those things technically are different. So you do need to be aware of that. And again, the key takeaway here is it says the buyer entered into a contract. So again, they already entered into it. And then again, they negotiated the sale on the side at the same time. So again, that would be the addendum there. All right, next one. Question 30. What is the difference between a lease option contract and a lease purchase contract? Gives us 4 options. A lease option contract and lease purchase contract are the same thing. B, the difference between a lease option and a lease purchase agreement is that the lease option only obligates the seller to sell. C, the difference between a lease option and a lease purchase agreement is that the lease option only obligates the buyer to buy. Or lastly, D, the difference between a lease option and a lease purchase agreement is that one is for first-time home buyers and the second is for any type of buyer. So take a moment, think one over, and come up with your answer. Alrighty, so what do you guys know about lease option contracts and lease purchase contracts? Well, you need to be aware of their difference. And the correct answer for this one is B. The difference between a lease option and a lease purchase agreement is that the lease option only obligates the seller to sell. So the difference between the two is, again, that seller to sell. With a lease option, the buyer is not forced to buy the property if they change their mind or cannot obtain financing. A lease purchase agreement commits both parties to the sale, barring breach of contract or the buyer's inability to secure a mortgage. Alrighty, next one, 31. Typically, a warranty deed contains how many covenants? A, 2 to 3, B, 3 to 4, C, 5 to 6, or D, 8 to 9. So take a moment, think about covenants, and come with your answer. Alrighty, so warranty deeds. How many covenants do they have? Well, it's going to be C, 5 to 6. Warranty deed can include 6 forms of covenants of title. A warranty deed is a type of deed where the grantor guarantees that he or she holds clear title to a piece of real estate and has a right to sell it to the grantee or the buyer. The general warranty deed offers grantee the most protection, and with this type of deed, they make a series of legally binding promises called covenants. So essentially, these covenants are promises protecting the grantee against any prior claims and demands on all persons in regards to the conveyed land. And typically, a warranty deed has 5 to 6 covenants, so you need to know that. All right, 32. The term licensee is commonly used in real estate law. A licensee is just A, a renter, B, a homeowner, C, a real estate agent, or D, a third-party principal. So take a moment, think about that one. Alrighty, so what's going on with this? What is a licensee? Hopefully you guys know it's C. It's a real estate agent. So remember, real estate agent is just a professional who has passed the required real estate classes and licensing exams in the state and where they intend to work. This is the starting point for most professional agents, probably including your guys yourself if you're watching this video. But yeah, so they are legally called a licensee or license holder. So if you're looking at the state laws, your state license law, it's going to say licensee. Sometimes, obviously, it's going to say salesperson, broker, agent, depending on what the specific rule or law applies to. But again, licensee covers everything, all included. So keep that in mind because it's super important to understand the distinction and be aware of that. All right, question 33. Which of the following fiduciary duties continues after a listing agreement expires? Is it A, loyalty, B, disclosure, C, confidentiality, or D, reasonable care and diligence? So take a moment to think that one over. Come up with your answer. Alrighty, so which of the following fiduciary duties continues after a listing agreement expires? The correct answer here is C, confidentiality. So this lasts forever. Confidentiality requires that you do not disclose any information learned about your clients, their business, financial or personal affairs, or motivations. Again, this duty lasts forever. All right, next one, question 34. Government power is the constitutional authority and inherent power of a state to adopt and enforce laws and regulations to promote and support the public health, safety, morals, and general welfare. Its sheet is, and it gives us 4 options. A, when a property owner sells their property and the government gets a portion of the sale. B, when a property owner sells their property and the local government gets a portion of the sale. C, when a property owner dies and leaves no proper documented inheritance plan, the property ownership reverts to their heirs. Or D, when a property owner dies and leaves no proper documented inheritance and the property ownership reverts to the government. So take a moment, think that one over, and come up with your answer. Alrighty, so luckily for you guys, we did talk about this a little bit earlier, but a sheet is D, is when a property owner dies, leaves no proper documented inheritance plan, and property ownership reverts to the government. So again, it's one of those essential government powers that you need to be aware of, come exam day. All right, next one, 35. What best describes an agent hired to perform a specific duty? A, special agency. B, a general agency. C, a universal agency. Or D, an exclusive agency. So think about that one and go with your answer. Alrighty, so what is the correct answer for this one? Well, it is A, a special agency. Special agent is an agent hired to perform a specific duty. The real estate agent's power and authority is limited to that specific task. Let's do an example. So if you list a house on behalf of a seller, you are hired for one specific job, listing the house. Once that job is complete, then the agency relationship is over. Alrighty, next one. 36. The person who hires or appoints an agent is called it gives us 4 options. A, deputy. B, principal. C, fiduciary. Or D, customer. So think that one over and come with your answer. Alrighty, so this person hires or appoints the agent. What are they called? The correct answer for this one is B, the principal. So, the person who hires or appoints an agent is called the principal. In plain terms, principals in real estate sales transactions would be the buyer and the seller. So it's important to understand the difference, and obviously that comes down to the principal and principal and agent relationship, and obviously the fiduciary duties that are included in that. You just need to be aware of that relationship and kind of how that works. And obviously this is a good example of an instance in which you need to be aware of, who appoints who. Super important to know. All right, 37. Tina and Tom are two unmarried individuals who own property with equal interests and without a right to survivorship. Which of the following forms of ownership would Tina and Tom most likely have? A, tenants by the entirety, B, tenants in common, C, community property, or D, joint tenancy. So take a moment to, think that one over and come with your answer. Alrighty. What is the correct answer? Well, it is B. It's tenancy in common. Remember, community property and tenants by the entirety is through marriage. You can't have that form of ownership with two unmarried individuals. Tenancy in common would be the best answer. Tenancy in common is when a parcel of real estate is owned by two or more tenants. Upon the death of a tenant in common, that share is transferred to the estate or heir of the deceased tenant. Now, unlike a joint tenancy, tenants in common have no rights of survivorship. So knowing that Tina and Tom do not have a right to survivorship and they are unmarried, we can assume that they have a tenancy in common. The amount of interest really doesn't matter in this case. So again, if we're looking at this, question, kind of lays it out for us. The two big hints here are equal interests and without a right to survivorship. Not equal interests, but unmarried individuals and without a right to survivorship. Those are two big hints. The equal interest really doesn't matter in this case. Yeah, it's those two that are like the big hints for us. All right, next one. Question number 38. What is the general technique of determining three-dimensional positions of points and distances and angles between them? Is it A, surveying, B, subdivision surveying, C, sub and plot surveying, or D, sewer lateral inspecting? So take a moment to think that one over. All right, the general technique is A. It's surveying. Pretty straightforward here. Surveying is the general technique. The point of a survey is to accurately measure land in a legal, fair manner, while subdivision surveying is definitely a form of surveying. This question, again, is asking for that general technique, the general form. So that's just surveying. All right, next one, question number 39. Which type of lien is a claim imposed against a property without the consent of its owner? Is it A, equity lien, B, mortgage lien, C, voluntary lien, or D, involuntary lien? So take a moment to really think about that one and come up with your answer. Alrighty, so which type of lien is a claim imposed against property without the consent of its owner? What is the correct answer for this one? Well, it is D, it's involuntary. So again, it's against a property owner without their consent. So it would be involuntary. So just remember that. Obviously, there's voluntary and involuntary liens. And again, involuntary ones aren't created by the homeowner. It's against a property without the consent of its owner. So the difference there is obviously one is voluntary, one is involuntary. Pretty straightforward, but again, you just need to be familiar with how those work. All right, question 40. An appurtenant easement has several ways of legal termination. Which of the following is not a valid way to terminate an easement? A. Expiration of the easement. B. Revocation by the servient owner. C. Release by the dominant tenement owner. Or D. A merger of both a servient and dominant parcels. So think about that one for a moment and come up with your answer. Alrighty, so appurtenant easements. These get a lot of people a little bit confused, so hopefully you figure this one out. So what is the correct answer? Well, it's going to be B. It's revocation by the servient owner. So easements are pertinent, meaning they generally pass along with ownership changes in real estate. But there are several ways of legally terminating them. There's expiration, release, merging, and abandonment. Those are all legal ways to terminate an applicable easement. The servient estate serves the dominant estate and cannot terminate easement even through revocation. So again, it says revocation by the servient owner. That's kind of the hint there. That's the meat of the answer. Essentially, again, the servient estate serves the dominant estate, and they cannot terminate the easement even through revocation. So again, this one's more or less just understanding the relationship between the dominant and servient estate, and pretty much understanding, how they operate and the relationship between the two. All right, next one. Question 41. Richard is renting property from Becky. Richard is on a month-to-month lease agreement. This past month, he did not pay his rent. Richard's interest would be classified as A, an estate at will, B, an estate of sufferance, C, an estate of periodic tenancy, or D, an estate for years. So take some time, think about that one, and come up with your answer. Alrighty, so what is the correct answer for this one? Well, listen, guys, this past month he did not pay his rent. So what would the interest be classified as? An estate at sufferance. B is our correct answer. So a tenant who occupies or continues to occupy property after his or her rights have expired is said to be occupying the property under an estate at sufferance. So it's important to note here, again, this is a month-to-month lease agreement, and he has not paid his rent. So again, the estate would be at sufferance. It's one of those important things, distinctions there with the month-to-month leases, and obviously, not paying the rent becomes an estate at sufferance. All right, 42. Which of the following statements does not correctly describe a fiduciary? A fiduciary must conform to the principal's legal instructions. B, a fiduciary owes loyalty to the principal. C, a fiduciary is a neutral third party. Or D, a fiduciary is an agent. So take some time, think about fiduciaries, and go with your answer. Alrighty, so which of the following statements does not correctly describe a fiduciary? The correct answer for this one is C. Fiduciary is a neutral third party. That is not the case. Fiduciary is a term that refers to a legal relationship that is confidential between two parties. The fiduciary responsibility is to protect the privacy of the client and to keep all the client's information confidential. An example of a neutral third party is an escrow agent. That would be a person or entity that holds, property in trust for third parties while a transaction is finalized or a disagreement is resolved. But again, in this case, fiduciary owes that responsibility to that specific party. So again, they're not neutral. They're not a third party. You know. Another example, again, would be that escrow agent. So you need to understand the difference between that and that relationship. Super important to understand. All right, next one, 43. A mortgage loan that requires monthly payments of $400 for 15 years and a final payment of $20,000. Typically, a loan structured like this is called because there's four options: A, a balloon loan; B, a payday loan; C, a standard loan; or D, a home equity loan. So take a moment to think about that one and come up with your answer. Alrighty, so what is the correct answer for question 43? So typically a loan structured like this is called a balloon loan. Option A is our answer. So balloon loan is a mortgage which does not amortize over the term. Now again, it's super important to understand that when there's that massive payment at the very end, that balloon payment, that's what it's called, that's going to be a balloon loan. So again, when you see that, it kind of gives it away right here. That final payment, when we're talking about mortgage loans and loan types, you should know that that is a balloon loan. Alrighty, next one, 44. Why is an oral lease for 2 years not generally enforceable in law? And it gives us four options: A, statute of frauds; B, statute of limitations; C, the Uniform Commercial Code; or D, Uniform Lease Code of 1978. So take a moment, think that one over. Alrighty, so oral lease for 2 years would not be enforceable. Why? Well, it's because of A, the statute of frauds. I did mention that a little bit earlier. Hopefully you were paying attention. But again, that's that legal concept that requires certain contracts to be in writing. Now, this one, the statute specifically covers contracts for sale of land, agreements involving goods over $500, and obviously contracts lasting 1 year or more. Since it's 2 years, again, it's going to be, not enforceable. All right, next one, 45. Holding earnest money without depositing it is what? A, always illegal; B, legal with written authority; C, legal with verbal authority; or D, legal if held by a broker. So take a moment to think that one over, come with your answer. Alrighty, so earnest money. What's going on here? Well, holding earnest money without depositing it is actually legal, but you need written authority. So again, it needs that written authorization. And, even then, it's best to deposit it as soon as possible. However, again, it's not always illegal. So there's that asterisk there. Now, obviously, with verbal authority, that's not good enough. And in many states, that's considered, illegal. So again, you need that written authority. All right, question 46. An appraiser has been hired to prepare an appraisal report of a property for loan purposes. The property is a 25-year-old strip mall. To which approach of value should the appraiser give the greatest weight when making this appraisal? Is it A, the income approach, B, the gross rent approach, C, the sales comparison approach, or D, the property expense approach? So think about that one and come with the answer. All right, so which approach to value should the appraiser give the greatest weight in this particular instance? Well, it's going to be A, it's the income approach. So overall, the appraisal process is based on tons of factors. Usually they use a combination of approaches, but they give weight to the most important one. So the income approach determines what a property generates in terms of income for its owner. So again, in this case, because let's see here, property is a 25-year-old strip mall. Again, it's generating income. So they would want to use the income approach. It's not a residential property. It is a commercial property in a mall. So they would need that. All right, next one, 47. An example of economic obsolescence in real estate gives us 4 options. A, old kitchen cabinets. B, a pole built at your mother's house. C, a noisy highway built right next to your home. Or D, sellers not being able to afford property due to economic factors. So take a moment to think about that one. Alrighty, so hopefully you know your economic obsolescence. What is the correct answer for this one? Well, it's going to be a noisy highway built right next to your home. That would be considered economic obsolescence. And economic obsolescence refers to loss of property value due to external factors, meaning things off the property are affecting the property's value. So obviously a noisy highway would be considered that because it is that external factor. Usually in these circumstances, homeowners cannot do anything to prevent it. So again, just need to be aware of your forms of obsolescence and obviously, examples of each. All right, 48. What best describes an agency relationship where an agent has legal authority to act on behalf of the principal? Is it A, special agency, B, general agency, C, a universal agency, or D, an exclusive agency? So take a moment and put your heads together and come up with the answer on this one. Alrighty, so what is our correct answer for this one? Well, it's going to be C, a universal agency. So if you remember earlier, we talked a little bit about the general agency, I believe. It's hard to keep track. But in this case, acting on behalf of the principal, it's going to be a universal agency. This agency has unlimited power. So again, this one isn't the specific, where there's just one thing. Again, this is the universal unlimited. That's normally how I remember it, or I tell people how to remember it. Is just think about universal unlimited. The universe goes on. It's unlimited. It's limitless. It's unlimited. It has unlimited power. So that's our answer for that one, and that's how I remember it. All right, question 49. In preparing for variable expenses in a property management budget, property manager should set up a what? Gives us 4 options. A, cash control account. B, asset interest account. C, floating allocation fund. Or D, cash reserve fund. So take some time to think that one over and come with your answer. All right, so when we're talking about property management, we need to be familiar with how that works, obviously. And one of those things that you need to be familiar with is exactly what the property manager needs to do, what things they need to set up, things like that. So in this case, when we're talking about variable expenses, we're going to need a D, a cash reserve fund. So that is an account set aside by an individual or business to meet any unexpected future costs, as well as costs of upkeep and things like that. Property managers use these funds for variable expenses. All right, next one, question 50. According to the do not call list and established business relationship or EBR rules, a real estate professional may contact a past client for relationship building purposes when? And it gives us 4 options: 18 months, B, 6 months, C, 3 months, or D, indefinitely. So EBR rules, think about that. Come up with your answer. Take a moment to think about it now. Alrighty, so you do need to be aware of these rules, the EBR rules, and basically you need to understand there's 3 different levels, and these are I would say there's 4 different levels essentially, and it's all determined with length. So for in this instance, because it says past client for relationship building purposes, again the answer would be D, indefinitely. So since they are a past client, it again that means that relationship, that door is open. Now if their business was terminated or expired, it would be 18 months. So you just need to be aware of that difference there. And again, in this question there's no mention of termination or expiration, so they can reach out indefinitely. So yeah, pretty good question there. One of the more trickier ones, but you do need to be aware of that. Thank you so much for watching. For part 2, click the video here, and don't forget to subscribe here. Thank you so much. Until next time. Bye-bye.